All right, let's get straight into it, guys. So we're going to start our analysis on the weekly time frame, okay? So off the weekly time frame on its own, we can clearly see price has been breaking levels going to the downside. Broke this level, broke that level right there, okay? So with the way price has been breaking all of these levels to the downside, it is most likely that price might come and take out these levels right around here on the weekly time frame. Since today is Monday and it's the beginning of a new week, we'll be looking towards this week coming up for a little bit and tapping into the highs of this previous week. Then we shall continue to the downside. So let's just scale down to the daily time frame. Okay, before we scale down to the daily, let's just mark up the high of the previous week, which is around there. Okay, that's the high of this previous week. This week that's here. Each candle represents exactly 1 week. Okay, so let's now scale down to let's scale down to the daily time frame. Let's see what's going on there. So this is our daily time frame right here. Okay, so off of the price action and the way it's been moving recently, we can clearly see price broke this level here, break of structure to the downside. Okay, and then right after breaking this level, price pushed to the downside. Okay, then we had a nice little retracement up into this order block right there, the order block that's responsible for breaking this structure right there. We tapped into it, then pushed to the downside. We haven't yet closed below this level on the daily, not even at the bodies or at the tip of the daily time frame. Okay, so that's something that we have to note. But then let's see what's on the 4 hourly time frame. So on the 4 hour, this is what we have right here. Okay, so off the 4 hour alone, you can clearly see that price moved from this level, went high, higher low, higher high, higher low. Here we didn't take out that level. Right after we tapped into this order block right there, we went pushed to the downside and broke this higher low right there that was responsible for this breakout structure here. So we took out this level with this push down there, okay? And then we came back for a retest into this order block. Then we would have entered here and pushed to the downside. So since I personally missed this trade, I was I was trading Boom and Crush at that time. Yeah, I really enjoy those two pairs, especially Boom 500. There's just something about it, especially when you're trading like against those spikes. And I just find it a nice downtrend. And I start taking advantage of those slow pushes to the downside. It really does some amazing things for me. But yeah, let's go back to this chart. So with DEX 1500 up, according to my rules, I shall only consider taking a position on DEX 1500 up if I see price come back to the previous order block that was responsible for this push, which is up there. If price does come above, which is up there, so I will be waiting for price to push from where it is right now till it goes up there. And when it comes up there, I will not be entering immediately, okay? I will be waiting for some lower time frame structure to confirm the entry, then I will take it down to these levels around here. Okay, and that's my plan, and that's the only the only way I would respond to the movements of this chart. So this particular, it might just leave that place and go up there, or it might go down and take out these lows and close lower on the daily, so that the daily is outside of this level right there, and we have a breakout structure on the daily that's way beyond that, and that's when it will consider retracing. But still, I won't consider any entry till we come back to this point of interest right here, so that we can have a nice risk to reward ratio and um, a good probability of it coming down to these lower levels. Okay, so according to like my entry my entries, let me just give you an example of how I enter my trades. So say we had to take this trade here that we mentioned earlier, so I would be waiting for price. Since price pushed up there, I would already have this order block here marked up. Okay, so then I'll start following price and seeing what it's doing. So price went up from there to there. Okay, then from there we went down from there to there. We made this high low and this high. So after we did that, price then left from this low and went up there, but this didn't close above, it came down below. Then this push here is the one that closed above. So this one I will not consider. I will consider this pullback, including this, to be one leg. So we pushed up to there. Okay. Oh yeah, we pushed up from there to there to there. Then we had these minor movements. From there, we went there, and from there, we pushed up to there and closed above with bodies. So after we tapped into this point of interest, or order block, if you would call it, we then pushed down to the downside. Okay. Right after pushing to the downside, I always mention that if two levels, if there are two levels that are equal like this, we shall always consider them as liquidity. So I'll just mark that with the arrow, meaning liquidity, and that price is most likely to come back and take these out. Okay, so price then decided to push to the upside. So the first thing that I was waiting for is price to hit this point of interest, which it did. Then I was waiting for price to take out a previous low, which it did right after hitting this point of interest. Then the third confluence is this liquidity right here. That's the third reason for me to enter. First one is point of interest. Second one is this level being taken out. Third one is liquidity down there. Then we started retracing, and I would have my pending orders at this order block right there. Let me just mark it out for you guys. At this order block from this candle to there. Okay, I would have my order block there. I I prefer doing active market executions, like immediate executions, rather than limits or pending orders, because I just like that extra confirmation. So I would be waiting for this particular, I would wait for price to hit this level. I know I wouldn't be in by this time. I would wait for some signs that it might go to the downside. So right around there, I would scale down to a lower time frame than the 4 hour and look for some sell opportunities in there. Okay. So let's just do that real quick. Let's scale from the 4 hour to the 15 minute. So on the 15 minute, this is what we have. Okay, like that. So price tapped into this level, eh? And it took out this inducement here, and we left the double top there. So we took out the inducement. We're in the point of interest. This is our recent low that caused this push to the upside. Let me just delete this for a bit. Okay, so this is our push that caused this to go to the upside. So we'll take that as our level. We'll take this here. So on this 15-minute chart, we then pushed to the downside. We had a shift in structure around there, went lower. Okay, so now this is confirmation for me that we're going to be switching direction. So right after that happens, to be safe, I would wait for our retracement back into this level right here that was just broken, and then I'll take my trade from there. I'll have my stops right above that level, which is up there, and my take profit will be just below. That's the 1 hour. So I take my trade there. My take profit will be at this level here that has to be broken, and my stops will be up there. And as we keep on breaking down, I'll start trailing my stops. So that's the first entry that I would take. But if I'm looking at taking a risky one or looking to be aggressive, I would keep my pending orders right around there with my limits. But if I'm being even more conservative than before, I would like to see this pattern. I don't know if you're familiar with chart patterns, but you can literally search for them or search for some templates about them on Google. And okay, I'll put them up right now and I'll show them to you. I'll just show you some examples right around now. And then, yeah, you can use those in line with your trading bias to get some high probability trades. Okay, so now let's continue. So this is an example of a chart pattern right here. This is what is known as a flag. Okay, a flag essentially just has a push, then some consolidation, then we break out of the consolidation, we retest that level, and I would take my entries right at that retest and have my stops right above this flag, right around there, and then I'd be looking to hit these levels right around there. Okay, let me just show you examples of how the entries would look. So if we are being aggressive, we would have our pending orders around that level. Let me just set this up real quick. Would have our pending orders up there, saying if price leaves from that level, goes there, taps in, we'd have our pending orders, we would float in loss up there, start coming back to profit, then we start breaking down to the downside, and our take profit would be at this level right there. Okay, giving us a risk to reward ratio of 4.76, which is very good. Okay, but then if I was being conservative with this trade, I would take this entry either off hitting this order block that we just broke there, but then this would be a low risk to reward ratio because I would still keep my stops up there personally. But then if I'm looking for more, being even more conservative with my entries and trying to protect my capital as much as possible, I would take it there Then this time, since I have a flag there, my stops would be right above there, giving me a 3.86 risk to reward ratio, which is also still good. Okay, so we're aiming for anything between a 2.5 and above. Okay, personally, I only aim for a risk to reward of 2 when I'm scalping and not for my big trades like this. All right, I hope you guys, I hope this video was helpful for you guys and give you some insight of what I will be expecting from the charts on DEX 1500 up for this coming week. Just to recap, we said we're waiting for the markets to push up from here to there, and we shall be looking to take our trades from right around there on our 4 hour point of interest down till we break these levels and hopefully go even lower. All right, stay blessed and happy trading week. And please do consider liking and subscribing if you found this video to be helpful, and suggest down in the comments what you would love to see from me next. Till next time, peace.